So price discovery wins again.
Yes.
What happens tonight?
Well, I think you'll have to see a little more selling coming in, but there won't be that pressure to get out before the halt begins. So they may be able to stabilize the market. So more concern is the currency.
About which they made no promises.
No,
right.
and they've lost a good deal of foreign exchange reserves, and that's going to present a little bit of a problem to them. So the currency is a concern of the market, and the other concern is crude oil. $32 level is a critical area. If it breaks 32, it might induce some extra selling because there are some derivative products that are linked to the 32 price, and you can see some of those weaken. And the other thing is the storage area at Cushing, Oklahoma is very close to being filled up. And if that gets completely filled up, oil can go into free fall because you'll have no place to store it. It'll just come on the market.
Are you looking for the washout in sentiment here? I imagine you're not seeing it today.
No, you're not. And while the volume has been up at other times, it is nowhere near capitulation type volume. Nobody's throwing out even the bathwater, never mind the baby. So we have some further way to go here. The volume at this point is higher than normal, but again, that may indicate that our friends across the pond are using American liquidity to get out.
So it means essentially we're not seeing panic selling?
Absolutely not, no.
What about levels to watch here? Below 2,000 on the S&P, below 17,000 on the Dow. Where are the levels of support?
Well, you've got to go almost all the way down to 16,000 for the Dow. And the other levels to watch would be 1955 to about 1958 is some support in there. So if we get back down around, and that you came very close to that at the lows today. So if you get back down around there, that'll be an area traders will home in on.
It's probably worth, for people that are tuning in, explaining what happened in China. They had a new rule that suggested that if you had a 7%, there were various rules along the way, but ultimately a 7% fall in the stock market, trade suspended for the rest of the day. This is really important, which they've now abandoned. That's what they're abandoning within the last half hour. Very important to point out the difference between that and what we do here. The idea that even after major disasters, the stock market must open to allow people to trade. And many people would say, that seems very, almost, I want to say bloodthirsty is perhaps the wrong word, but inappropriate sometimes. The reason we do it, surely, is because otherwise the pressure to sell gets greater and greater and greater. As you've seen in China, people can't get out, and it has a velocity of itself. So we do it in this country for the way that we do it for very, very good reasons.
Yes, I mean, we do have trading halts at certain levels, but we...
But you come back, you trade later.
They are pauses to allow people to regroup. Closing for the balance of the session would only occur usually in the final hour, so you're not giving up a great deal of time.
The other thing that it occurs to me, having watched Stanley Fischer with that excellent interview yesterday with Steve Leisman, is how the Chinese and other countries around the world don't have the sort of people that can go out in public, like Yellen, like Fischer, and create calm and say what appears to be the right thing and explain what's happening. Nobody in China is explaining what's happening. Eunice Yoon is reading it off a website or social media, and that's also a major difference between how we've learned to do things here and how presumably they will learn to do that there as well.
Well, we try very much for transparency and full and open knowledge of what's going on. And it's not that we don't have bumps, but it tends to work out better in the long run.
Finally, I'd love to know your reaction to Soros speaking in Sri Lanka, saying this reminds him of 2008. He says he would use the word crisis. It's at the top of Drudge today.
Yeah, well, I'm not sure where all the analogies he sees are. Now, obviously, it is apparent that we still have areas of contagion. China drops and suddenly everybody else in the world sees their markets nervous, but I'm not sure where the analogy to the highly leveraged part of 2008 would be. Again, we'll see that if we get to some critical prices like crude down below 32 and see if some of those derivatives come back to haunt us.